Good evening. Today is Monday, August 18th, 2025. Our episode begins with home builder confidence is low. According to Market Watch, it was expected that the home builder confidence index would rise from 33 to 34, but instead dropped to 32. The National Association of Home Builders Index is a pretty simple survey sent out to home builders asking if they think conditions are good or poor. If it's half and half, this number's 50. If it's below 50, it means more of them have say that it's poor. If it's above 50, more of them say that things are fine. As you can see from this chart that dates back to 1985, we don't typically go very much below 50, if at all below 50, except for in recessions like in 1990 and in the Great Financial Crisis, the Great 2020 dip, and then more recently, really since 2022, this has not been a very friendly chart. Rising above 50 only briefly a few times over the past several years, and very recently not showing very much strength at all. This current chart doesn't have the current number on it. The updated numbers back down to 32, the lowest that we've seen it since December of 2022. When this stays down for a while, it is not a good sign. It's absolutely amazing how many economic signals are showing such bad waters ahead, and yet the S&P 500 still at all-time highs, basically. It's an amazing time in markets. We'll move on to our next headline, notable earnings this week. What I mean is a lot of retailers coming out with earnings starting... Sorry about that. What I was trying to say was the notable earnings this week are retail. We have Home Depot, Target, Lowe's, TJ Maxx, Walmart. These earnings reports typically give a lot of very good insights into how consumers are doing. We'll likely see some headlines coming out of these companies this week. The third headline of the day is just a seasonality reminder. This is a chart from stonex.com, simply showing very clearly the typical slowdown that you get in August and September. This is the average monthly returns in the S&P 500 since 1990, and as you can see, usually August has about a negative 0.5% return for the month, and in September, maybe 0.8% negative. These are the 2 months that are infamous for being weak. So I think it's important to have that in the back of your mind whenever you're making any decisions over this month and the next month. Community topics: what moves, if any, did you make today and why? Not just because of the seasonality, but because of everything else under the sun. I think it's very likely we'll see some stock turbulence over the next few weeks. And with junk bond credit spreads being so tight, I couldn't help myself. I bought a bit more HYG puts today. I found some that expired this Friday today that were extraordinarily cheap. Basically at the money. Essentially no premium over the exercisable profit. So I don't know how they were so cheap today, but anyway, I bought some more. Coming up, we have Wednesday, the Federal Reserve FOMC minutes released at 2 p.m. Sometimes there's details in here that can rock things around. Also, the thing that everyone has their eye on is Powell at Jackson Hole. Fed chairs are famous or infamous for releasing their deeper inner thoughts about how they see things moving forward. If I had to guess, I would say that Powell is likely to be more hawkish than he's ever been at this meeting. And it has a lot to do with the valuation of the stock market. I think we're in a bubble, and I think he knows that we're in a bubble. And I think he knows how dangerous bubbles are, but it's just my guess. Also on Thursday, we have PMIs coming out and weekly jobless claims, and as always, tariff updates. Thank you for watching, subscribing, commenting, and supporting the channel. My views on markets are unique, and if you don't subscribe, you might miss out. No changes to the daily reminders macro views, although the home builder confidence, maybe I should add that. Read my website to read through these important things. No changes to the crystal ball readings or the Robschild portfolio. On to the charts, starting with the S&P 500, the SPX closing essentially completely flat today. Honestly, I was expecting a lot more volatility because I thought things were kind of getting to a neutral standpoint on Friday because of the options expiry date. But not a whole lot of drama. The VIX popped up earlier today in the morning and then dropped off to actually go negative on the day a bit. The 10-year Treasury note yield rose by 1 basis point today, still inching its way to the confluence of these two red trend lines I have here. It looks like it is still acting like a magnet and wants to get straight to 4.4%. where it will surely be rejected to the downside. Next, crude oil. If you're watching it this morning, it looked like it was just fallen, and then midday it kind of picked back up, but still within looking like a bearish trend. The reason that I'm hearing that it was able to pick up today was because of some news. This is a headline from the New York Times. Trump backs off ceasefire demands in the thing going on over there, aligning with this guy. So a little bit more perceived risk in the oil market here because of this. Next up, gold. The pattern that I'm seeing after last Monday's large engulfing red candle to the downside, we've been finding lower highs, lower lows, lower highs, lower lows. It looks like it's still going down from here. Interesting update in the Fed funds futures for the October meeting, flipping from there being a high probability of a second cut in October and now looking more like it's going to have a cut in the September meeting and then a pause in October. But not really as much of a change in the December, so still expecting through the end of the year 2 cuts. The 5-year and 10-year break-even inflation rates caught my eye today only because of how unusually flat we've been going over the past few days. Really, since last Wednesday, we were at 2.42, popped up to 2.43, and then 2.42 for 2 days in a row. It's not normally very stable like this. What it suggests to me is a battle going on here, and like any chart, the longer you go sideways, the bigger the eventual breakout. That was the 5-year, and here's the 10-year showing a similar thing. Higher lows and lower highs coiling up. Perhaps a larger than usual move is coming. Speaking of charts coiling up, my favorite scary chart to be looking at is the 10-year minus 3-month Treasury, just coiling up around zero, currently 1 basis point above zero. This is just plain and simple the scariest chart I've ever seen. Look at this thing coiling up here like it's about to just absolutely explode. You can coil up tighter and tighter, but you can't coil up tighter and tighter forever. Next up, Bitcoin seeming to fall quite a lot today and recovering so far. I am short Bitcoin. I think it's going to go a lot lower. Next, the dollar getting suspiciously quiet, suspiciously stable. I think the dollar is a lot stronger than most other people think out there. So I think we're going to head higher. We'll see how it works out. Speaking of charts that are going suspiciously sideways, holy mackerel, look at copper. Just how many candles is this now? 1, 2, 3, 4, 5, 6. Whoops. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So many charts preparing for chaos. Chaos is coming, friends. I'm not sure exactly what it's going to look like. I have my suspicions, which is why I have the positions I have. But all of these charts just winding up in such tight ranges, better watch out. Next, KWEB, Chinese internet stocks knocking on the $38 door for the, how many times? One, two, three, fourth time? I'm hearing there's actually a lot of earnings from these companies coming out this week. With the companies in this fund being suppressed in their price to earnings for so long, I think that we actually have a pretty good chance at a breakout to the upside despite tightening dollar liquidity and potential volatility in the S&P 500. Emerging markets don't always have to act exactly in line with the S&P 500. I think that's important to remember. With gold in a bubble and silver being unusually expensive, I find rare earth metals miners to be a particularly attractive place, especially because of their relative extreme undervaluation in my estimation. We rose 2% today, and I see the next major pivot point getting to around $63 about. It's the height of December 2023 when we had a major top right there. Lastly, I wanted to give an update on MSOS, one of my holdings that I've talked about a lot on the show. On the 4-hour candlestick time frame, we have a pretty clear head and shoulders pattern developing. Okay, it's not necessarily a head and shoulders yet. We could easily have this turn into a bull flag looking thing, but as it stands, it wouldn't be extraordinary for us to break. Let me get rid of these lines here. Break this neckline here. And funny enough, the target for this is about the level where we actually broke out of to the upside, which was the pivot high back in May, that exact top. That was the breakout, and so it wouldn't be surprising to me at all if MSOS drops down to 338 before continuing actually much higher. As long as the rumor persists, that's what I sort of see happening. Because after all, I have a crystal ball. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching and see you next time. Robschild.